Moments ago, I sat down with the CEO and chairman of Bank of America, Brian Moynihan, and I asked him first about those worries about global slowdown.
Well, let's start with what our experts predict. We have the top research firm in the world, and they have done a great job. And they have the U.S. growing at 2.5% this year, the world growing 3.5% GDP growth. But that's down from last year. And so the confusion in the environment right now is it a slowdown or is it going into recession? Nothing we see says it's close to recession. Our experts don't see it, and in our behavior in the consumers, especially in the U.S. consumer-led economy, you're seeing that grow, at 5-6% in January so far, 8% year over year from 18 to 17 in terms of cash used and spending and stuff. Very strong, and then unemployment's real low and wages are growing, so everything's pretty good. It's just slowing down a little bit, and everybody's saying, "Oh my gosh, that means it has to go here." It doesn't. It just can slow down. We'll have if it comes out the way it's predicted, it'll be the best year in growth other than 18 in 7 years or something like that.
And you just reported an incredible fourth quarter, very strong. The consumer banking business, very profitable. You've been able to report 16 straight quarters of positive operating leverage. How do you keep that up if, in fact, we do see a bit of a slowdown?
Well, it's just hard work, and the team does a great job. But the real sort of thoughtful way it happens is the application of technology to allow us to keep expenses relatively flat where revenues grow a little bit. And revenues grew, operating leverage revenue grew faster than expenses, but revenues grew last year at 3%, 4% overall, something like that. Expenses were down a couple percent on a fair basis after tax reform. And so very strong. But the way you do it's by applying technology. The way you do it's by applying efficiency. The way you do it by getting an alignment between you and the customer about services and capabilities, simplifying the place, taking out processes that don't add value. And we have 4,200 ideas we put in place in the last 3 or 4 years to continue to make our company more effective that a customer would get a benefit of, but their teammates get a big benefit of, and how to just keep doing that. And it's just hard work. You had a plan multiple years ahead. We spend $3 billion on technology. About a third of that goes to making the company better.
And what, $14 billion on overall technology in terms of employees, operations. Yeah, I want to get to technology because I know you're way ahead of your competitors on that. But let's go through some of the business lines in the fourth quarter because it was quite impressive. And I know consumer banking, the most profitable. When you look at the global markets business, capital markets in particular, we saw the quarter was tough for everybody with the markets the way they are. How do you improve the global markets profitability, or is this even a business that you need to be in?
Oh, no, it's a big business for us. We make, in our markets business, we made like $3 or $4 billion after tax. Last quarter, we made $500 million, I guess it was. But if you sort of think about it, we're in the markets business because we're good at it, but also we're in it because it connects the issuing client, the company issuing bonds, and the people buying bonds, the company issuing stock, and the people buying stock. And then the research platform supports that, and then the wealth management business. So the scale of the company allows us to be more efficient. So those businesses, the fixed income business, had a tough December. It really wasn't a quarter. Everybody forgets that coming out of November, everything was fine, and then the lockdown. So it was really a month, and it's reverted back to more normalized now. But if you look at trading revenue for the last 4 years, it's been sort of 13.1, 12.9, 13.1, 13.2. It's been relatively stable. We run the business to move the money through the system, to provide financing for the customers. We don't take a lot of just straight risk. We try to keep the risk down. So over the course of 10 years, the revenues have stabilized. The risk is way down. The numbers of people are down, and we're making probably twice as much money as we did back in the day. And so it's a great business.
Well, there you go. Tell me about the market's performance, though. What do you think the markets are telling us? I mean, we didn't have any high-yield debt issuance at all in the month of December. How long can the credit markets stay where they are before you get worried about that? And what are the markets telling us?
Well, the market's back open, and we're doing a bond deal right now, a bond for social purposes and things like that, and it's well received. So December was really unusual, and it was part because, frankly, people go on vacation in December, so there's a lot less activity, and then you put a lot of worry about the market. But if you ask me broadly, and you asked our experts, Chris Hayes and the team that does the wealth strategy and wealth management business, they would basically say, look, the market instantaneously tried to price in the uncertainty of the environment. Both is growth slowing down or is it stopping? The whole political uncertainty around the world, and it priced it in like instantaneously, and risk came back off, and that high yield moved out. The demands from investors were for more yield. It settles down, and then we'll go back out and do it. But that happens once in a while. It happened, and so I think the thing is people because of the atmosphere potentially and the slowdown or overreacting to that. And you've seen the market settle back down and absorb news of the day, and we'll see what happens.